Happy Thursday, everybody. The Fed Chair Powell is gearing up for quite a week here out at Jackson Hole. We have a great question of the week about Americans' excess pandemic savings and where has it gone. So my name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise here along the way. This week is a little bit quieter, but it is certainly the calm before the storm. So we've got a few data points to touch on. We'll touch on a great question of the week from Gary, but really we're gearing up for next week. So definitely want to tune in next Thursday there. This week on Tuesday, really a lot of home data the last week. On Tuesday, we had existing home sales come out a little lower than expected, but then right after on Wednesday, we actually had new home sales come out higher than expected and a pretty big jump from last month. Here in the Pacific Northwest, or at least in Seattle, Bellevue area, we really haven't noticed a whole lot of impact to housing prices. But across the country, it's a little different story. So keep in mind, this data is really from across the country. And we've certainly seen some cracks in the housing market, but nothing really to write home about, I wouldn't say, in this last week's data, especially with the kind of varying, data points there. We also had initial jobless claims come out. Again, nothing really surprising there. But what I do want to share is that here we are on Thursday, and Jackson Hole is, there's a conference out in Jackson Hole that's kicking off. So all day today, we've got a Fed official interviews coming up tomorrow, Fed Chair Powell kind of kicks off the whole conference. So definitely stay tuned. We're going to touch on the question of the week here from Gary, but stay tuned next week, because as we get into next Thursday, we will kind of package everything Fed Chair Powell shares at Jackson Hole, which certainly could lead to some volatility depending on what comes out of his mouth. And most importantly, this is the last jobs week before the Fed, and we get the last PCE data before inflation, or before the Fed meeting as well. So we'll get some more inflation data ahead of the Fed meeting there in September. We still get CPI data before the meeting, but this will be the last PCE data point we have before the Fed meeting coming up in September. So stay tuned next week. Again, this is kind of like the calm before the storm. Before we get too far ahead of ourselves, though, we had a really good question of the week from Gary. Basically, there's a lot of news articles out there these days talking with a federal study suggesting that basically Americans have depleted their excess pandemic savings. And so the question is, number one, is this just like a headline attention grabber? And then number two, if not, how does this actually impact us as individuals, but also the markets and the economy as a whole? So it is a very good question, because it's been a long time since we've really touched on this topic. But if you go back all the way to the middle of this pandemic craziness we've been through, we have thrown a lot of money out there. And we had shared a long time ago that one of the impacts of that, of course, is going to be inflation, right? If we raise the money supply, likely we see prices increase from there. And so we've seen a lot of that impact over time. We've seen, the consumer be extremely strong because they've got not entirely, but maybe a quarter more assets than they had before. And so we've seen this like spending trend just continue and continue and continue. And now there's a federal study suggesting that maybe some of this excess savings from some of the pandemic programs is starting to, well, not even starting to, maybe is depleted at this stage. So I do not think it is just a headline attention grabber. In fact, I think this is really, really important. I think that a lot of this has propped up our economy and our spending for the short run. But the question, of course, is, will there be a hangover or not? And it's very difficult to answer that question. But if we do start seeing the consumer weaken, that is where things could shift a bit. And we've been watching this for a very long time, because the reality is jobs and the consumer have been very strong in a period where everything else has really kind of had a tough time, right? With interest rates rising, with earnings coming down, you name it. So if this translates to a weaker consumer, it's very important. And I think for us as individuals, it's important to pay attention to this. If you find yourself in this boat, where maybe there was a little extra savings, extra funds available to you through some of the COVID programs, just be cautious. This might be a good time to buckle down a little bit and make sure we don't overspend, because that seems to be kind of the trend here as well. There's a lot higher debt as of late. Now with that, there's also a lot higher asset levels. So keep in mind that those two, can go hand in hand. But nonetheless, I think it's important to watch. And if, as far as the impact to the economy and the markets, if the consumer does slow down, that could be kind of like the caveat towards this official recession. Now, again, that does not mean markets are going to drop significantly tomorrow. We are feeling much more optimistic than we have been in the past. But it's still very, very possible that we see a recession. And if the consumer slows down, maybe as a result of this excess pandemic savings being depleted, that could be the catalyst to that kind of slower economy and kind of a reset, maybe is a good way to put it, right? Doesn't necessarily mean the sky is falling, but a bit of a reset so that we can move on. So thanks, Gary, so much for sending that in. I think it was a really good question and very timely, because this has been a topic for years, but because it has been so just part of the conversation, we haven't really come back to focus on it. So really appreciate you for sending that in, Gary. And thank you guys all for joining us here. Be sure to tune in next week. Again, kind of the calm before the storm this week, but next week we've got the Fed chair comments from Jackson Hole, last jobs data week before the Fed meeting, and some inflation data coming in there as well. Have a great upcoming weekend. We will see you next Thursday at 3.